Fibonacci retracements can be used for both short and long trade opportunities, like getting short right here for the move lower, or even in this situation where we came right into the golden pocket, coming back and retested a prior resistance level, now turned into support for another move up higher. Now you may be asking yourself, what is Fibonacci? It is found all around us between fruits, seashells, and a whole lot more. So how's the Fibonacci sequence calculated? If we take the first two numbers, we add 0 plus 1, it's going to equal 1. Then if we add the next two numbers, 1 plus 1 equals 2. We add the next two numbers, 1 plus 2 equals 3. We add the next two numbers, 2 plus 3 equals 5, so on and so on. Now, how can we use Fibonacci to find great trading opportunities? Well, first, we want to be able to identify an impulse leg, and just think about an impulse leg as a straight move. So in this case, when we basically had a swing high right here and the market moved lower, we want to see, what is the Fibonacci retracement levels the market is likely going to retrace to. Now for this, we can come right over here to Trading View, and you can come right over here to your drawing tools. You want to click the Fibonacci retracement tool. Now what we can do is we can hover right over the top of this candle, the wick, all the way down to the bottom wick of this candle. And I usually just grab my cursor over so I can extend the levels to the right just a bit. And what do you see? We came right up to one of our key zones. So let's talk about what are the key zones that we need to pay attention to when we're using the Fibonacci retracement tool. Now we want to come right back over to our Fibonacci retracement tool. I'm just going to go ahead and get this on the chart. We want to select it, then go over here to settings. Now from settings, we want to come over here to style. Now, a lot of different traders will use different Fibonacci levels, but I'm going to tell you the most important levels we want to pay attention to. One, we want to make sure we have the 0 line turned on. We want to make sure we have the 382 level turned on. We want to make sure we have the 61.8 level turned on. We want to make sure we have 1 turned on. We can deselect some of these other levels. Then I want to make sure that I also have the 0.5 level turned on along with the 0.786. Now, not all of these levels are actually Fibonacci levels, but these are the key levels that I found very useful within my trading. Now, if you want to change the colors, you can do that right over here. For this demonstration, I'm going to keep them exactly how they are. We have a value from 0, 38.2, the 50% retracement, 61.8, and 78.6. Now, ideally, you're going to want to see a retracement form somewhere in between the 38.2 and the 61.8. Once we start breaking the 78.6, it really increases the odds the market's going to come all the way back up to 100% retracement level. Now, I don't want you guys to get too worried about the Fibonacci retracement tool. If anybody has ever used a tape measure before, think about Fibonacci as nothing more than a tape measure. So when do we want to use the Fibonacci retracement tool? And it's very simple. Anytime we see a straight move in the market, which is also called an impulse move, we want to go ahead and measure the retracement to see if there's a way that we can get a good entry into the market. So for this example, we grab the Fibonacci retracement tool all the way from the swing low, meaning the candle wick, if there's a wick, all the way up here to the swing high. Notice right where the market retraced down towards between the 50 and the 61.8 level, then the market rejects, bounces up and out. Now you might be asking yourself, Mike, how do I know where the swing point actually is? Well, you know what? You're in luck. You want to come right up here to indicators, then you want to go ahead and type in fractals. You want to go ahead and install William Fractals. Go ahead and click that on your chart. Now what we can see is it's populated a lot of these little arrows up and down, trying to identify swing points in the markets. Now, once we have fractals turned on, we want to come over here and go to settings. And under settings, we want to go ahead and bump this up to at least 4. 4 or 5 will be our ideal situation. You might want to play with this depending on the instrument that you're trading. But look, we drew the swing point from the correct location. We had that arrow pointing down there. And where was the one up? Oh, right here. So this tool is very, very helpful. However, if you have it set on 4, if you see the triangles really close towards each other, those are going to be ones where we simply don't want to drag. And if you don't want to see that many fractals, we can come right back over here to settings. And if we actually bump it up a little bit, then you'll see that it's a little bit cleaner. So you really got to see, how you like it. But the ideal is not to have to rely on the fractal tools. Use it initially to help you identify the swing points. But then once you get accustomed to what swing points are, you'll be able to spot them with a blink of an eye. Then you can also keep the charts a little bit cleaner. So now that we know how to use the Fibonacci retracement tool, how do we find pinpoint entries into the market with very low risk? Well, let's go ahead and do the exercise once again. I'm going to go ahead and grab the Fibonacci retracement tool. measure from the swing low right up here to the swing high, and then I'm going to move my cursor over here to the right. That way it will extend the lines to the right. Notice what did price do? Came right down, almost hitting the 61.8 Fibonacci level. Then we get almost a bullish engulfing candle. So on the close of this candle, we can then look to enter the trade. Target number one being all the way up back up here towards the swing high. And then target number two, we can push out for a potential runner. Now, if we go and look at this, what the risk reward would be on this trade, we can go ahead and we can adjust this right below the lows of that candle. And we'll just do a target number one back up here towards these highs. We can see in this case scenario, we'd actually have a risk to reward of 1.33. However, that's not counting the potential runner that we could have had. Now I know what you're thinking, Mike, does this only work on buy side trades? The answer is no. If you're a bear in the market or you just like to short the markets when the opportunities are right, I'm going to show you guys this also works to the downside. So once again, we're going to grab our Fibonacci retracement tool. We can see the triangle that's pointing up right here for the swing point. We're going to measure from the top of that candle all the way down to the bottom of this candle here. Then what do? We start to get a bounce back up, and notice where the key Fibonacci levels are between the 61.8, 38.2 retracement. We overshot it by just a little bit. Then we close down. We have what's called a shooting star candlestick pattern. Then the next candle, as soon as it starts going below that candle, we can look to go short, looking to target all the way back down here to the bottom of where that swing point was. Now, if we come back over in this situation and we grab our trade tool and we measure and just see, what's the risk reward on this particular trade? Remember, stop loss just needs to go right above the candle. And in this situation, we actually have a 2-to-1 reward to risk ratio on this trade, which is very favorable. Now, put it in the comment section down below. If you have a 2-to-1 reward to risk ratio, what does your win-loss ratio have to be in order to break even or be slightly profitable? Now, you'd be surprised how many traders actually get this question wrong.